Hi, it's Joe Solari here from the Business Owners Compendium. And what I wanted to do today was to do a recap on the presentation that I did at the 20 Books Las Vegas convention. A bunch of you weren't able to make it, and then there was those who were there and had to make the tough choice between seeing me or going to see Chris Fox. And frankly, if I was not doing the presentation, I would have been seeing Chris Fox too. So this is a way for you that thought that they were recording the sessions to see what I went over in the business breakout session. So here we go. A little bit about me. I have a bachelor's from the School of the Art Institute of Chicago, so I'm a creative like most of you writers. But I also have a business master's degree from the University of Chicago. I've owned and operated 4 different businesses. Some of them were startups that we bootstrapped. The latest one, I raised $21 million. The reason I tell you that isn't to brag, but just to show you the scope of the different businesses that I've run and to let you know that in both ends of the spectrum, a lot of the tools that I use to manage my businesses are the same. Now, most folks that are writing have gotten the first part of this. They've decided what they love to do, and now they're at the point where they're either trying to figure out how to make money with it, or they are making money and trying to figure out how to manage that better. The great thing to understand is that as a person that is creating content, as an author, you are in a golden age of content creation where this intellectual property that you create can be used across multiple channels to create all kinds of rivers of cash for you to generate tons and tons of wealth. Hollywood is desperate to get great characters and great stories, and you guys are producing it. And as you guys get better and better at your profession, the doors are going to be opening up to allow you to bring that content to different formats. And what I'm going to really cover is some basics on how to make sure that you protect yourself in that process and you look at the best ways to manage that. Now, your business, just like every other business in the world, is about cash flow. Cash flow generation is the key to how a business is successful and how it's valued in the future. The more regular and repeatable that cash flow is and the faster it grows, the more that business is going to. I threw this little quote in here. This is the business you've chosen. It comes from Godfather 2. When Michael is in Cuba and whining about the fact that somebody shot up his house at his son's first communion, Hyman Roth reminds him that this is the business they're in, and it has these shortcomings that people may want to kill you. Your business probably doesn't have gangsters shooting at you, but your business is going to have things that you're not going to like to do, but you're going to have to do. And the more successful your business becomes, and the more it matures, the more you're going to need to have control systems and have things, as much as we can possibly do, put them on autopilot. No matter what, even with doing this as best as we possibly can, you are going to be required to put resources into your business and take that away from what you love to do. Now, that could be money, it could be time, but you're going to have to dedicate some additional resources as your business gets more successful. What we're really trying to do is limit the amount of joy kill that the business puts on you. A lot of times, not just as authors, but in all kinds of businesses, people get into it because they love to be with their customers or what they do, be outdoors, whatever it is that whatever got them into that business. And then they find out that the business itself is what starts to cause them the most grief. I'm going to help you solve some of those problems and talk to you about some ways to start planning that in the early stages. What I can't help you with is a business that's unsuccessful because the content you create isn't good or you can't connect with your audience. But if you can, if that elephant in the room is gone, then we're going to have some opportunities to help you guys feel better about your. So one of the things I did to get prepared for the conference was I did a survey. I asked 6 questions around how you feel about your business systems for tracking, how you feel about your strategic planning, how you feel about working capital, retirement strategy, intellectual property, and maximizing the value of your business. And you can see the numbers. There isn't any of them that are above 2. And when we go to a composite score, it's 1.62, 2 being average. So one of the things I want to do is help you guys to think about how I can get you feeling like a 3 or a 3 plus. And to do that, I think we should attack some specific areas. Here are the 5 areas of focus for your business. I think if you spend a little time in each one of these, you'll be more confident in how your business is operating. So let's talk about them. They're planning, cash management, compliance or record keeping, asset management, and wealth creation. They're all intertwined. They're all important. When you're weak in one, it'll impact the others. Let's talk about planning first. At a high level, a strategic plan, even if this is something you write out on a sheet of paper and put on next to your computer. Can you articulate who your fan is? Who is it that your target audience that you would be writing to? What is the value that you're bringing to them? And how are you working this into everything you do? How you communicate to them on email, write your books, everything. That's your high level. Now think about planning at a very tactical level. How are you writing out a plan for when you do a launch? No matter whether you're successful or this is your first book, you're going to launch a book and you're going to need to understand your break-even point, how much money you've spent on it, have some type of estimate as to when you think you're going to break even, how many books you're going to sell, how many Kindle pages you need read. Have that written out. Next, think about how those fit together, how you can use those building blocks of that launch plan to build up to your strategic plan. Understand how it all fits together. Begin to apply numbers. Understand what your break-even is. You need to know what your revenues are, what your royalties are, number of units. Start baking that all into your plan so that you can understand and measure how you're performing, either above or below your plan. Next is cash management. Cash management is critical, especially in the beginning when you're putting your initial working capital into your business, and that first launch has got to be successful because it's going to be what gets you the cash for the next launch and the one after that. So planning ahead of time and understanding what your cost of goods for your books are, how that is going to be recovered over sales. And very importantly, when I talk about this launch trough, understanding that you may spend $400 or $500 to $1,000 for one book launch. And on that launch day, if it all comes back to you, that's awesome. But most of us that have launched a book don't see that money coming back for 4, 5, maybe 6 months or a year. Understand that and plan for how that's going to impact your business. Because if you need that money to come back before you can launch the next book, that's going to give you a good idea on what your writing schedule is going to be like too. The next layer in cash management is the 52-week cash flow. Now that might sound scary at first, but it's a model that I use from my book that allows you to plan on a weekly basis what cash is incoming and outgoing on your business, and to project forward so you understand your needs for cash in the future. Because here's the thing about cash flow, and specifically the concept of working capital. Working capital is the money that needs to sit inside your business on a day-to-day basis just to keep it running. It's the oxygen. As your business grows, its lungs get bigger and the amount of oxygen that it'll need is going to increase. So the amount of money that needs to stay in your business will also increase. High growth businesses can get themselves in a lot of trouble if they don't plan to have that cash around to fund future projects. So you need to have a good plan around that. Finally, it falls into your income statement and balance sheet. Now, if you're going to be setting up a company to run your business through, and I understand many of you don't, but when you do, you're going to need to have a balance sheet to do your tax return. We're going to want to get you to the point where you can understand an income statement and a balance sheet and use those to plan and report on your business. Now, a tool that I suggest is using Wave Accounting. It's a free accounting software that's on the cloud that allows you to build these things right from the bank account that you associate with the accounting package. It allows you to then go in and to categorize the different items, and then from there it automatically builds those reports for you. So that segues us into compliance and record keeping. Regardless if you're just starting out or you're running a business that's doing $100,000 a month in royalties, you need to be keeping your records. In one case, you may be doing it just in a notebook on a piece of paper that you'll give to you'll use for your taxes at the end of the year on your regular tax return when you itemize. If you're running a more complex business, then you need to be keeping records and probably looking at that stuff on a weekly basis. It is important for you to stay compliant with your taxes. Your revenue will be reported by Amazon. If it's any amount more than $400, they're going to issue a 1099. And you'll need to claim that as well as any expenses against it. When looking at expenses, there's a concept called discretionary income. This would be items that you're expensing that could be seen as perks for being the business owner. You need to keep track of that stuff just so you know the true value of what you're getting out of the business. And we need to have a relationship between what you're getting as salary, what you may be having as expenses, some of those being perks, and what you're paying in taxes. Here's a big section we really need to talk about, and that is asset management. Your assets are the source water for all the rivers of cash you're going to create in the future. The basis of protecting them is copyright. Now, you may know that when you copyright a book, it is copyrighted. But without registering that copyright with the Copyright Office, it is not defensible in a federal court. They won't even take the case. You would have to then rush out and register it. So do this, and do this within 90 days of you issuing the book. I'm not asking you to do this or recommending this for you to be worried about plagiarism per se. These assets will be the basis of what you're able to assign and license to other people. So if you have a movie deal, one of the things they're going to do is due diligence to make sure that these assets are clean. And if they're not going to do a deal. So build the structure today to make sure you keep that stuff clean. And the way to do it is pretty simple. Register those assets. When you get the materials from the Copyright Office, you stick that stuff in a folder and you have it for those days when you need to do it. And if you do start to assign assets, you keep records of that. When your business is more complex and you decide to set up an LLC or corporation, then make sure you assign those assets to the corporation so that it can use those assets on behalf of you. Now let's talk a little bit about assets and how to make sure you get the most out of them strategically. Think about what somebody like Disney does. They're great at managing assets. Every 7 years, they open up the vault and they resell the same movies that they've been selling for almost 100 years. Another good story is that of Jasper Johns, associated with the vault. He has been taking works that he has created since early in his career and keeping them from the public eye. At his death, his family will have the largest Jasper Johns collection. None of it seen before. And seeing as that he is one of the highest paid artists at auction, this could be worth billions of dollars to his family. So start to think what you might want to do for the 5-year anniversary of your book. Maybe it's issuing some type of director's cut, additional content, but how you can leverage these assets better and create more rivers of cash. This brings us into wealth management. Again, going back to the building block, the book launch, the series, are you generating a positive return? When do you generate it? How fast do you generate it? Measuring these things, again, this gets back to our reporting and our planning, and understanding when you start to generate positive cash flow that you can reinvest back in your business. This is going to be the best source of your growth capital, is these books starting to produce cash flows that you can reinvest back into the business. Then you're going to work yourself up to the point of a salary, where you can pay yourself a salary. This is really the point where you're establishing an LLC and then electing to create an S Corp underneath it, or with having it treated as an S Corp. At this point, you're going to want to set up an LLC and then elect to have it treated as an S Corp. Now, the reason we want you to do that is not that it's going to give you any real big tax advantage. It could be argued that you'll get within a couple $100 either way on what you pay in taxes. The biggest reason is this. It'll be easier for you to get a loan at a salary at $50,000 with a W-2 than if you had a salary at $100,000 and were self-employed. The fact that the W-2 is issued by a company that you own and you're essentially self-employed isn't the point. The point is that the system that we live in the United States is set up to verify income through the W-2 form. It's trusted. So if you have that to be able to provide to somebody that you're buying a car from, so getting a car loan or doing a mortgage, you want to have that. It's going to give you so much latitude when you get into these areas and save you so much heartburn. So that's why we're going to do that. Now, when you really start to see some money coming in, before you go out and buy a bunch of crazy stuff, the next thing we want to do is establish a 401k plan in your LLC and then fully fund it. This is the single biggest thing you can do to minimize taxes today, defer taxes into the future, and make sure that money is coming off the table and being spread out so that you will have funds for your retirement. Because you're self-employed. Nobody else is going to take care of you. Now, I mentioned earlier that you should start looking at some other things you can do. So as your business gets more mature, there's going to be some more opportunities available to you. If you build out a back catalog and have a solid content portfolio, there's opportunities to actually sell your business. Once your business has 3 years of solid financials, you are going to be able to have people look at it and do things like offer you credit, do asset-based lending, and things like leverage recapitalization. For example, David Bowie had 30 years of clean copyright. In fact, it was so clean that he had the royalties sent to the same address for 30 years. In 1997, he took his back catalog and he borrowed $75 million against it, promising to repay that loan in 15 years with the royalties from that back catalog. If he defaulted, he would have lost the rights to all of his songs. But he didn't. He paid off the loan and got all those rights back and was in control of all of his back catalog until his death. What he did with that, though, was he was able to take money from the future and bring it to the present value, and then take that money and diversify it across assets, thereby giving him a much more stable foundation for his finances. Those are the kind of things we can work on together once you get to that level of sophistication. None of this stuff will be available to you if you are making mistakes early and often in the future. You need to get these things right and get them set well so they're, one, habit for you, but two, show a long history of diligent and disciplined operation of your business. Now, I know I've thrown a lot of stuff at you today. You have a couple opportunities here to draw on some resources. One is I have a cheat sheet infographic I've made for the writing industry that covers different levels and the things you should think about at those levels. Now, it isn't to be followed verbatim. Some things may be better for you sooner or later, but it at least gives you a guide to a lot of the questions that you would be asking, especially if you're a beginning author, when you should be looking at these things. I'm always available for a one-on-one. I was doing it through the conference, and I would love to be in contact with you. You can reach out to me either by email at joe@middlemarketplace.com or text me at 630-272-5935. Hope you found this information valuable, and please feel free to reach out to me if you have any questions about how to build your business as an author.